me now bring on board Prasun Gajri, Chief Investment Officer with HDFC Standard Life Insurance. Prasun, good morning. Thank you for joining us. Prasun, there seems to be an air of profit booking in both local and global markets. Do you think in the near term, local markets and global markets have hit some kind of a stumbling block?
Very difficult to say. There does seem to be some profit booking. There does seem to be some risk-off trade across the globe, pretty much across most asset classes actually. But very difficult to say how long it will sustain. This is very news flow driven. You get a couple of news which don't seem very good, the market sells off. We have the budget which is coming up. Depending on what it really brings to the table, the market would react to that. So I would take these events as something which will probably continue to happen as we go along the year, because we will always have these times when the markets run up and then there's suddenly some negative news, markets tend to correct, and then the next leg starts. So I would not be too perturbed by this, but in the short run, yes, it is going to cause some volatility.
What do you think the budget could do to kickstart the market momentum? Because the argument on the street is that this year's budget arithmetic is already out, which means the cat is out of the bag. The suspense factor is not there.
Well, I don't think I would agree completely with that. See what the budget can really deliver. I think two things the market would really look towards budget. One is obviously fiscal consolidation and how believable those numbers are. I don't think there is too much doubt that the finance minister would show a number of 4.8% fiscal deficit for the next financial year. But how credible is that? What are the bases of that number, I think will become important. And therefore, what is the government borrowing program? If the government borrowing program does not grow too much, that augurs well for bond yields. And that is going to be positive for the equity markets. I think that is going to be one aspect of it. The second aspect is, what can the government do to revive the investment cycle? What are the steps the government really takes to get moving on that front? I think market will closely watch that. And third and more importantly, I think one has to really look at one factor which will increasingly become important. How to get back the savings into financial services, into the financial instruments, rather than say gold or real estate. So, given the pressure on the current account and the fact that the financial savings are at virtually a decade's low as a percentage of a GDP, I do expect certain steps to be taken by the government to encourage financial savings. Now, if any of these, even two out of these three things happen, I think those are all very positive for the equity markets. So I don't agree really that the budget is already known and it is going to be a non-event. I think when the event happens, that will be positive. If it doesn't happen, obviously it will be the other way around. But I would be closely watching this budget.
Prasan, but what could be the way forward for equities? I mean, we've seen outflows of $4 billion already in the last 15 odd sessions. The global picture at this point in time, in any case, is looking tentative, with March 1st being a very, very crucial date in terms of global movements. Do we see more redemptions and outflows? Or do you think the market is going to continue dragging its feet where it has been for the last couple of trading sessions?
Well, there could be more outflows. I don't think there is anyone who can really predict that number. But my sense is that while there could be a little bit of downside, I don't think it's a market where one needs to be very bearish. I think let's look at it from a more macro perspective. On the macro side, the reforms are well and truly underway, and I think the government is determined to take them through. So that augurs well. I think that is something one has to really watch out for. The earnings quarter wasn't very great, but very clearly the downgrades are pretty much bottoming out. So we are not really seeing too many more downgrades coming through, while the upgrades may still be some time away. The flows so far have been reasonable. The domestics have been selling. My sense is that selling will abate as time goes along, because a lot of that selling has to do with the fact that people have kind of recovered the money they invested 4 to 5 years back, and they really don't want to take any further risks with that money. And the fact that the fixed income markets are offering very attractive opportunities as far as the investor is concerned, because most people believe the interest rates will fall. So there has been a disproportionate amount of money flowing into bond funds. Now that opportunity could play out over the next 3 months. And once that happens, you could see the domestic flows coming back into the equity markets. So my sense is, I think let's not really look at too many of these short-term factors and short-term news-driven movements in the market. I think the valuations, the fact that on the macro front things seem to be improving, we seem to be bottoming out on the earnings, and the flows is something which I am positive about in the next 3 to 6 months. I think this is a market to be invested in, not to be running away from.
Prasun, but the bad news here is that consumers are also slowing down. Now the India romance is the consumption story, the demographics, the fact that Indian consumers are slowing down, and India has been hit because of double-digit inflation for 3 years on a row now. Do you think somewhere slowdown in consumer could disappoint us, and that also could challenge earnings for FY14?
Well, consumer slowdown looks very evident, but I don't think it's such a disappointing thing. If you look at it, a little bit of consumption slowdown is something which is very good for the macro and therefore very good for the economy over a slightly medium-term view. Look at it from this point of view. We have running a very large current account deficit and fairly high level of inflations. And that tells us that we have been consuming more than we should have been. And therefore, any slowdown in consumption augurs well from a current account point of view, augurs well from an inflation point of view, and also augurs well from increase in savings, because any slowdown in consumption should lead to some increase in savings. Now, all that is good from a macro perspective, and therefore, I don't think one should be too bothered about some cyclical slowdown in consumption. I think consumption is a secular theme in India. We will continue to see these periods where it slows down for a while, but I do not think there's anyone who's concerned about a 2 to 3 year view on consumption. So while yes, we see some slowdown, the stocks may react negatively to that, but that is overall, frankly, a good thing as far as the economy is concerned.
Okay, Prasun, good chatting with you. Appreciate you taking the time out and joining us on the show today.